Hey, welcome back to YT Finance, and today we are talking about Palantir Technology stock, ticker symbol PLTR. We will go over the newest PLTR stock news that you need to hear right now, like how many negative bearish analysts that report on Palantir stock are being disproved day by day, or why former Palantir employees have left the company to build their own disruptive companies, and how Palantir is investing into a blockchain technology company which moves Palantir one step closer to adopting Bitcoin as a means to preserve some of their cash on their very well-funded balance sheet, because Palantir literally has billions of dollars just sitting there doing nothing. Go and destroy the like button right now for more PLTR stock news updates. Comment down below your thoughts on Palantir, and if you like the company or not. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. The author of this article and I are both longtime fans of Palantir and their stock, but it seems that investors are losing enthusiasm for this stock because the stock price has been holding a solid consolidation pattern for the last few months. However, I personally think that the PLTR stock price has huge upside potential to make many people very wealthy despite what haters say about it, so I will be proving the naysayers wrong in this video with data. First, I would like to point out that Palantir is a major player in the defense industry, which is extremely lucrative. This is one of the reasons why Cathie Wood of ARK Invest loves buying this company's stock so much, because of how important its technology is for the military. This big data company continuously announces new contract wins from the United States government to provide its military state-of-the-art intelligence information at a moment's notice. This way, soldiers get accurate data quickly, which can save lives. This makes data vital to completing missions, which makes Palantir's capabilities almost invaluable. Palantir uses their Gotham platform to link many vendors that the military uses into a single data platform, so Palantir can analyze this data and generate important insights from this information. According to one of Palantir's press releases, it says this, and I quote, "The Gotham platform is designed to support Army intelligence users worldwide with a globally federated intelligence data fabric and analytics platform spanning multiple security classifications. This capability will field modern data integration, correlation, fusion, and analytic capabilities that prepare the Army for the next fight against emerging near-peer threats." End quote. However, despite Palantir landing impressive contracts with the US government, how valuable their Gotham platform is for the military, or how much Cathie Wood loves Palantir, Wall Street analysts are bearish on this stock. One point that bearish analysts repeatedly bring up is how Palantir can potentially lose their Falcon contract with the Immigrations and Customs Enforcement Agency, which has gained them around $111 million since 2013. But if we think about it, this contract only really paid Palantir around $13.8 million per year on average. So let's be honest, this is one contract that could be lost, and it would barely be felt compared to Palantir's yearly revenue, which is over $1 billion. Also, Palantir's technology is very sticky, which means that once an entity uses their technology, it will be hard for them to replace it with another technology because of how integrated its capabilities truly are. Even with that being said, according to Barron's, a Citigroup analyst has a negative view of Palantir by giving a PLTR stock price target of $18, which is around a 21% downside from its current price. Other analysts agree with this price target, and they think that the PLTR stock price will underperform the overall market next year. Clearly, I disagree, and I would view this as a buying opportunity if the stock fell to $18, but let's go into why these analysts could be mistaken. Firstly, the fair value of the stock was $20, which is $2 above $18, and then this was upgraded by Morningstar to $28. So a price target below its fair value is hard to believe. Secondly, PLTR has many long-term contracts with the US government, and they continue to land contracts, which will make Palantir's technology harder to replace in the long run because of their sticky technology. Lastly, PLTR is very popular among retail investors and investors like Cathie Wood Wood of ARK Invest and Peter Thiel, who are both respectively brilliant investors. Now let's talk about Blend Labs, ticker symbol BLND, which plans to disrupt the financial sector, and this relates to Palantir, and I'll tell you about it in a second. This business will help legacy businesses such as banks, credit unions, and even fintech companies streamline their processes using digital transformation. Blend Labs has already partnered with big banks like Wells Fargo, as well as other disruptive businesses like Open Door, ticker symbol OPEN. The CEO and co-founder of Blend Labs was also a professional poker player, and he also worked for Palantir Technologies for 4 years, which was the only company on his resume, but he then left Palantir to create Blend Labs, which currently trades at $13.52 after falling a lot, but analysts' price predictions for the stock are $18 on the low end, $23 as the average, and $28 on the high end. But now let's talk about Palantir's connection to blockchain technology. Well, as a part of the Foundry for Builders initiative, Palantir is offering their Foundry platform on a subscription basis to a company named Elementis. What's really funny is that Elementis has a Palantir alumni who works for them now, whose last name is Raghavan. She had worked for Palantir for 8 years, and she was also the CEO of the blockchain and crypto startup named Gem. However, she has now been appointed as the Chief Strategy Officer at Elementis, who will direct the company to take on national security threats, criminal activity, and regulatory compliance. Raghavan told this to The Wrap, and I quote, "Covering these issues as a journalist prepared me for leadership positions at companies at the cutting edge of the tech sector. Reporters use data to uncover patterns that connect to the bigger picture. Those same skills help me understand large-scale data integration and analytics platforms like Palantir and Elementis, which use similar connect-the-dots methodology, and communicate their power and value to customers, strategic partners, investors, and the media." End quote. Elementis was founded back in 2017, and it aims to analyze financial transactions on the blockchain. Their LinkedIn profile reads this, and I quote, "Identifying security vulnerabilities, exposing bad actors, and providing market intelligence for making informed investments in digital assets." If you didn't already know, all transactions for cryptocurrencies like Bitcoin are recorded on what's called a ledger, and this ledger is public knowledge. This data on the ledger can actually be analyzed and mapped to look for irregularities to find suspicious activity. So depending on how the relationship between Elementis and Palantir goes, even though Elementis has an alumni on their team, Palantir could start integrating some of their resources into blockchain technology as well. Recently, the CEO of Elementis was asked about China banning the trading and mining of cryptocurrencies in regards to how it will impact his business, and he responded by saying this to Entrepreneur, and I quote, "I think it's very hard for the government to enforce something like this. It certainly is not going to stop people from trading crypto. They've gotten very used to finding ways around bans." He then proceeded to say, "A large part of what people think of as being the China ecosystem in crypto is actually located offshore." End quote. So basically, he doesn't know exactly how it's going to impact his business, but he is pretty confident that crypto is going to easily survive, especially because most of China's ecosystem, quote-unquote, is located offshore. Because of this, those offshore mining operations or trading operations will not be impacted by this ban. Not that China can even enforce this ban very well anyway, because cryptocurrencies are so decentralized. He goes on to say, "But China is the clearly dominant country when it comes to Bitcoin mining, and the largest miners in the world come from China. So, if Bitcoin mining is truly now illegal, I think that is a game changer for at least that ecosystem, and that it is really going to impact the entire mining industry." End quote. The CEO of Elementis says that this ban is probably mainly due to further the adoption of the digital yuan over in China. However, he did note, and I quote, "China has been putting in place bans like this for many years, since long before they were talking about creating a digital yuan. So I'm more inclined to take the explanation at face value. Each time they do a ban, it is to protect consumers, and at least that's the stated reason." End quote. Now, I slightly disagree with this because I think they're banning cryptocurrencies because they don't like the decentralization aspect of why cryptocurrencies are so popular, because it prevents one single entity or many entities to have too much say over the entire community. But what are your thoughts? Comment your thoughts down below, smash the like button on this video, especially if you made it all the way to the end, turn on all subscription notifications to stay informed, and I will see you in the next YT video.